Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Lindsay in Wisconsin.
Hi, this is Lindsay from Sauk City, Wisconsin, and my question is regarding escrow. My husband and I are refinancing our mortgage and have the option to continue to escrow for property taxes and homeowners insurance, or we can budget and pay for those on our own. There is no fee charged either way from my bank, and our loan to value is at a level where we are not required to escrow. The escrow account has a 0.17% interest rate, but I know I can get a higher yield savings account online. Am I better off getting the better rate or taking the work off of my plate and having the bank take care of the taxes and insurance for me? I look forward to hearing your advice. Thanks.
Thank you, Lindsay, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
Yeah, so this is a question that I think a lot of people aren't even aware of, that there's a possibility here. Most of the time, and a lot of it goes back to your loan to value with your home. If you don't have that 20% down payment or 20% equity in the home, it's not even a question. The financing company is going to have an escrow account for you to be able to pay taxes and insurance and things like that. So, but once you reach that threshold, sometimes the lenders do give you that option. So it's really, it really comes back to, I think, your personality and how you want to, manage it. So with the escrow, the loan, the officer, the loan company, they're handling all of that for you. So they're taking an extra payment to be able to pay taxes and insurance. And if you do that yourself, then you obviously have to, pull the levers to do that. So it really comes down to a question of convenience versus control. And I think part of the question is that, can I eke out a little bit more of an interest rate? And as we know, with, where interest rates are going today, that's becoming tougher and tougher, especially in the short term. So, I guess the way that I would break this down is, really look at the pros of a mortgage escrow account. So the one pro is that it is automatic. It's kind of just one less thing to worry about with regard to your finances. Though, they're doing that for you. If you do come up short, if the escrow account does come up short, because, your homeowner's insurance and property tax may fluctuate over time, then the escrow basically covers that for you, and then they adjust the payment going into your escrow account over time, and it's predictable. So you have a predictable monthly payment. The escrow statement will show any necessary adjustments that will occur, but it's definitely something that is again more of on the automatic perspective. And then some banks will offer a discounted rate if you have an escrow account with them. So if you kind of keep it clean with them, then they might give you a little bit of a discount on that. Now, the big cons is that it is automatic. That's a con to this, where you could potentially put your money to better use. But this is really money that you shouldn't really be investing per se. And they give you a discount for a reason on the rate, because they can potentially use that money on the float and things like that. And then the other big thing is that a con is that you may be required to, have a large initial escrow contribution. So there's several months of property taxes that you would need to come up with. So, I'm kind of torn here. I think if all things were being equal, I probably would just have them take care of it. I understand that you might be able to eke out a little bit of a better interest rate, but I think it's probably, and I think it's one of those things where I think for a lot of these you pay, quarterly or two times a year. And unless you're being really diligent, which again, I'm a big believer of with regard to your savings plan, it can kind of get lost in the fold a bit. So I kind of just view it as, hey, it's just part of the mortgage payment that I make. Let the mortgage take care of it, and go from there.
Yeah, and I'm glad, Tim, you talked about pros and cons of escrow, because I think here that's really the debate that I see. I mean, 0.17 is what Lindsay mentioned. So could she put that money elsewhere and get a little bit higher, even in a long-term savings account? In today's environment, yes, but I think the difference is not that significant. But really, more importantly is, how do you feel about escrow and pros and cons? And I think your point's a good one, that if you're not going to be an escrow, making sure you're setting up a system to be ready for those quarterly or two times a year payments in terms of both insurance and property taxes. So perhaps creating an automatic savings sinking fund or something that you have those ready to go. So it does put more ownership in your court and more responsibility. I'll say, for me personally, and maybe this is just the type A side of me coming out, escrow is always one of those things that just drives me nuts. Like I feel like it's that feeling of like, when you go to close and you're looking at closing costs, and then you've got to, as you mentioned, pre-fund a lot of escrow. And, that's something that folks need to be thinking about when they get to the point of closing on a home or even on a refinance. But also too, I've had several instances where probably some of my fault where, escrow was over or underfunded. And then you have to make a decision, or you get a check back, which is nice. But on a underfunded, you've got to make a decision on, paying that all at once, or you're going to roll that into a higher monthly payment going forward. And I think one of the small but important things, at least for me, is we looked at pulling out of escrow with the recent refinance that we did and talked about on a recent episode of the podcast, is I feel like I have a little bit better pulse on my taxes and insurance situation that tended to get, just for me, folded into with escrow, that I didn't really think about it, out of sight, out of mind.
Yeah.
But doesn't mean that if you're in escrow, you couldn't just pay more attention to that than I did. So I think a couple other things for folks to think about.
Absolutely. Yeah.
Awesome. So Lindsay, thank you so much for submitting your question. We featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist podcast. And as a small thank you for submitting your question, we'll be sending you a super comfy YFP t-shirt. And for those that are listening, if you'd like to have your question featured on a future episode, please go to yourfinancialpharmacist.com/ask YFP, or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.